Yeah, so I want to go over this gold chart one more time about these peaks and dips and things like what's going on with the euro. And I think the problem with the euro is going to crash gold one more time. That's what I'm thinking. The charts, though, let me put it this way: technicals, yes, can be very rigid sometimes. Sometimes rigid-minded people get into technicals, and that is maybe why they get interpreted wrong. I don't know, but technical or mathematical information is actually found all through nature. It's not like it's something that people try to quantify and say that nature has to work this way, but nature does follow certain laws and rules, and a lot of it, there's a lot of mathematics found in everything, even the whole galaxy, the way it's shaped and everything. Now, this is the gold chart, daily chart. So back in August, end of August, and also the beginning of September, we both had peaks of gold of over $1,900. But you notice when it made this peak, it made like a double top, more or less, and then it dropped. Now, the same thing can be said, in other words, every time it makes the secondary high, it was lower than the initial high, but it retraces. Same thing when it hits the bottom, it bounces. It bounces. So you kind of make a double bottom, then a double top, right? It kind of does that. It bounces. It bounces. Now here, I can expect that, since it hit this point right here, which is, seems to be a lot of resistance. If you're looking back at all the price points, it bounced here. This was a fib point and everything, too. It could bounce up to about here. It can go over 1700. But I don't think it's going to take that long before it hits the bottom again below, 1500, say mid-April. Because when the markets tank, they don't go down slow. They don't give you any warning. They just crash. Now, I'm not trying to be a fearmonger about the gold market or anything like that. I'm actually out of it because I think this is going to happen. But I don't want to short the market because I'm not 100% sure it's going to happen. And number two, you never know how long you have to short. I think it's going to be mid-April. By mid-April, this thing's going to be crashed. That's what I'm thinking. But it could be even longer than that. Now, if I see this happening in real time, I will try to jump on there for maybe half a day or something like that to catch a trend. That may be a smart thing to do. But just to get in a short position and hold out, I don't know this is going to crash for a fact. And nobody really does. But let me put it this way. If you're looking at the long range chart, the weekly chart, and I'm showing a lot of periods of time here, so it really brings out things all the way back to 2007. Back in 2008, gold actually, it didn't close over 1,000, I don't think, but it went over 1,000. And that was in March 2008. I think it closed around 9 something. I forgot what maybe it did. It closed at 1,000. It did close in 1,000, 1,002. But it dropped down. It went up to a lower high. It peaked out again. Went up to a lower high below 1,000. Dropped again. Went to a lower high and then a lower low before they actually did QE. It's very interesting that in a way, now this looks more radical because these are bigger numbers, but I guess if you show this on a logarithmic, it'll look a little bit better, because it goes to show you just how much percentage retracements these were doing. So up here we had the highs, we had the peak. This is actually more like a double top. It doesn't show up too much on a weekly chart over a longer range. Dropped down, went up to a higher high, a lower high, a lower low, lower high, and I assume just like in 2008, another lower low before they get heavy on QE. So I would expect, though, for the next time for this to jump up, it's going to probably go well over $4,000 an ounce in the next couple of years, probably closer to $5,000 an ounce. If we can assume this is a whole, bull flag, it might be up to almost $5,000 an ounce in a couple of years. That fast, 4,500 around there. So, if you're getting in the market here, that's going to be a hell of a percentage gain. As far as using leverage on that, I don't know. I think it might be smart to use a percentage. Now on silver pullbacks, I don't know if I'm going to go into silver because, well, depends. It might be a mixture of gold and silver, and it probably will be a mixture of using physical sprott funds and leverage debt runs. That's on double leverage. That's probably what it's going to be. I think. Let me get on with this thing about the euro. I was looking for information that can briefly describe what I think is going to happen with the euro, and without getting too much into stuff. And they have this. I don't even know what this is. It's just some generic picture of a roller coaster, but it looks like the European financial system, and it is very much interconnected. I guess that could be, it's just a generic picture of a roller coaster, but that's pretty much what's going to happen with the European financial system here pretty soon. This succinctly describes the situation very well, and this is why I changed my mind, because they're actually defaulting. They're actually defaulting. They're not printing money. They're defaulting. If they started printing money like crazy to cover Greece, everything would go up, but they didn't. That's why I changed my mind. Before, they were more like printing money, then they weren't, then they were. When Bernanke said no QE and this stuff starts happening in Europe, I'm thinking, there's going to be one more big crash. It goes on to say Greece got a sweet haircut from the private investors. Politicians in Portugal, Italy, and Spain and other European nations are going to wonder why they shouldn't get some debt forgiveness too. That is pure common sense. Also, private investors are almost certainly going to be less likely to want to loan money to European nations from now on, if they will be required to take massive haircuts at some point. In other words, to get screwed over at some point, then why in the world would they want to lend huge amounts of money to European governments at super low interest rates? And when they're saying private investors, that's like pension funds and things like that. So, I mean, there's a little truth to that Lindsey Williams story about losing money that's on paper. It's going to be through stuff like this, mismanagement, basically. I don't know why they invested in Greece, but it's probably not their money. They just manage it. It's just money they manage. That's private. It simply does not make sense now that Greece has defaulted. The whole game is going to change. This is just the beginning. That's what I think, because they're all going to default. And there's a major thing about here. This is more of a minor. Well, let me tell you what I think is going to come up soon right after this little statement. If a government can go in and retroactively change the terms of a bond just before it's ready to default, then why should private investors invest in them? Now, you might, a statement like that makes a lot of sense, but you're thinking, well, that could be something for later on. But this is where I think is something's coming up soon. I guess, but something might be coming up soon. If you remove all hedges and offsetting swaps, there's about $70 billion in default insurance exposure to Greece out there, which is a little bit bigger pill for the banking system to swallow. Is it possible that some banks won't be able to pay on their default policies? We'll find out. Indeed, we will soon find out. And I'm thinking if some counterpart, here you go. This is what I've been thinking all along. If some counterparties are unable to pay, we could see some big financial problems cascade throughout the financial system. Now, as you know, I forgot where I read this, but I did read it, and I think it's good information. There's a lot of money flowing out of Italy and Spain and up into the northern European countries like Finland and stuff like that, because the banking system over in Italy and Spain looks fragile. So, this may be coming up soon. I don't want to get into drama stuff. The world is not going to end. But let's say gold goes down below 1,500 and silver goes down well below 26, 24, 25. It's going to be a perfect buying opportunity for real. Not like all this other junk that we've been hearing all this time, like, yeah, that's a buying opportunity here. Well, no, this is one. There's going to be one more. And, it's not good to listen to somebody that's just you know what, on a big picture, The gold and silver trigger leaders are correct because it's going to follow this next thing up. When this increased like, you know, more than 200%, it's going to go another 200% again. It's going to go over 4,000 gold, probably more than likely in the next 2 or 3 years, or by the time Ben Bernanke leaves office in 2014, gold will probably be around a good $4,000, if not at least 3,500, at least. And silver's going to be in 3 digits someplace. There's no doubt about it. But he's going to make you money, and basically the gold bugs and silver bugs are correct. But they've been extremely wrong about this because this is a correction period, and they keep saying it's the banking system conspiracies and all this other stuff. But really what's driving up the price of gold is quantitative easing and devaluing the dollar. They're kind of devaluing the dollar in here, but it's not being felt that much because the economy is that bad. Now, I want to go back to this chart again. If you think gold went up good, all right, and it went up pretty good. It cleared, I don't know, it was 1780 or whatever it was. It had this big jump up. Silver had this big jump up. Platinum and gold are about the same price. The ratio to gold to platinum is about 1 to 1. You know what? If gold went up and did this big jump, platinum did a much bigger jump. Platinum also did a much bigger crash before. Expect platinum to have a bigger crash this next time if gold crashes below 1,500. Platinum might go to like 1,310. So, and I think palladium is going to go in the 400s. I'm not sure, but if the one happens, those other two are going to happen too. Worst. So, but don't try to short the markets right now unless you see all the banking systems are crashing. You might want to do it for a few hours. That's about it. I would not well, it's individual choice, but I'm going to tell you, I'm just waiting this out with cash ready to buy.